Hello everyone, welcome back to another weekly market update from Xylostar.
Global markets turned volatile this week as Middle East tensions pushed oil prices higher.
True, Kevin Warsh at Washington took an oath to be the new Fed chair head, which means a lot of people started to have these expectations that interest rates will remain high for a while. Let's see how that's looking on charts. All right, everyone, here we are starting our technical outlook over assets. Now, I've spent more time analyzing things and I will try to keep this as brief as possible because a lot is happening. This week is very, very interesting to what I see it. Now, after Kevin Warsh had spoken his oath, and now we can see that this is the beginning of him implementing his vision over financial markets, which is, first of all, possibly he wants to cut interest rates over a long period of time. And for now, he's considering to keep interest rates high. His main goal is to strengthen the economy, strengthen the dollar, improve business, and so on and so on. So once policies start to be implemented, and he wants also the Federal Reserve to be more passive about being involved in the economy itself, all right, you guys can have a research in regards. So looking at NASDAQ for a start, as I had highlighted for you guys, there is a very high possibility for NASDAQ to break below the trend line to the support, and this is exactly what happened. And from here, it is at all-time highs, creating for us a, let's say, a bearish pattern here, which shall reflect a bearish movement to come to the downside. Now, this is about NASDAQ. Now, if we speak about the possibility for it to go up again, this bullish movement, all right, happened post Nvidia bringing positive reports as in revenue. And Nvidia right now is occupying as the spine for AI growth. If Nvidia is doing well, or basically to investors or a lot of other aspects too, the AI investments are performing pretty well. If not, then it is the opposite, and Nvidia got positive reports, and hence we see this, let's say, bullish movement to the upside. However, volume does not support this bullish movement. And if we go to a bigger time scaling, and take a bigger look about US 100, we can see that US 100 is now at the peak of an uptrend that has been there for approximately a year by now, even more than a year and a half, we can say. And it's giving us a lot of bearish reasoning to believe that a crash on this asset might be coming anytime soon. All right. So we can see here, as in candle formations, patterns, trends, the break and retest, volume declining. There's a lot of even momentum indicators. There are a lot of technical reasoning why this asset is giving us these indications that might fall. And I'm not speaking about this week. It's actually more of an outlook over the period of the remaining of the year. We're speaking about a quarter or two. So about NASDAQ, I would definitely not advocate for you guys to enter an investment now. Rather, if you have if you trade NASDAQ, I would advocate more, of course, not a financial advice, but to be on the shorting side. And as we can see, if we can estimate market movements as a natural money flow, we are seeing the levels of 26,000 to 27,000, and by we I mean I'm seeing that as is an optimal target over the coming, let's say, 6 months of time. So that is about NASDAQ. Markets might be very impulsive to a certain point, but they also must make corrections in order for money to flow. And if Kevin Warsh keeps the interest rate high, that means it will be more difficult for more consumption. It might also increase unemployment, and AI is a third priority to basically the community or the society overall. That is about US 100. Shorting this could be actually a good idea. Of course, it's not a financial advice, it's all for educational purposes, but keep in mind that when you guys are taking trades with it. And we can see that even though here we have a bearish engulfing candle, we have an increasing volume, market went up but volume is decreasing, which means yes, there is a lot of interest in, or at that particular period of time, to put money into AI, and that's because the positivity Nvidia has reflected upon financial markets. But that is not necessarily the case to remain, right? So be very cautious, and we might actually see a movement. We could see market creating for us a bearish pattern before moving to the downside, or it could start moving to the downside. Of course, this movement is not going to be in a day or two, right? It might be over a certain period of time, which what basically we speak of all of this. So we might see a lot of consolidations, a lot of here and there, because even if we keep in mind, if we keep in mind that Kevin Moore's policy is to maybe we could see things like that, whatever, overall, because he wants to bring more stability rather than the Fed's contributing into, let's say, more volatile movements. So that's about US 100. Going into gold. Now, gold also is performing bearishly. And yes, I had spoken to you guys that this is a strong demand zone. However, we can see that Kevin Warsh taking the Fed chair position shall reflect on more positivity upon the dollar, right, at some certain stages. So in a small overlook upon gold, we can see that, yes, I did highlight that gold should go up before moving down, but it didn't actually go by the previous week. So now it's more of consolidating. So we can expect that retracement by this week, since this movement wasn't actually very direct to either directions. Right, we can expect that movement and then an eventual movement to the downside. Now, if we take a larger view upon gold, we can see that we have multiple trends on multiple time frames, and they are all looking as bearish on gold. Now, previously we had bearish sentiment upon gold, not because of the asset itself, gold itself. It was because investors and basically other participants in the market were purchasing dollar in order to purchase AI-related stocks and oil too, right? But now we have policies to come from Kevin Warsh that are supposed to increase bullish sentiment upon the dollar, business, etc., etc. So from that point of view, we can see that the sentiment, as in bearish sentiment on gold, has been levitated. So we can expect a further movement to the downside, right, reaching the support and also the lower bracket of this trend. And there is a very, very good, considerable, let's say, a possibility that gold actually continues moving to reach 4,000 eventually, right? Maybe we'll see that as a movement to the upside, then to the downside. Okay, as an analytical view, that there's not necessarily any military conflict to happen within the region, as in something to affect financial markets very negatively and cause gold to spike up. Rather than that, it's just being delayance situations, political stuff, which are causing the oil prices to move, right? And of course, a lot of other aspects in financial markets, but we can still see that positivity in a lot of different ways, including that investors are still buying shares, or at least were buying shares for the last whiles in all these AI-related stock company, especially highlighting the majority of them are in US itself. So that's about gold. We should be very cautious trading gold for a while to come. So that's about gold. Going into Euro USD, of course, bearish sentiment upon the Euro USD is there because of the more positive outlook upon the dollar. So we see this movement. We can expect a consolidation pattern where it just consolidates in that channel and goes to the upside. On a larger view, we can see that Euro USD is at support, and this, let's say, struggling in a bearish movement is due to the demand that was at these prices before, looking at it technically. But overall, we can anticipate that Euro USD continues fall into this trend line. And if everything works with the Feds implementing their plans, we might actually see a strong retracement to the Euro USD to come about this demand zone, which is 1.11 at a later on stage throughout the year. So keep that in mind. This is about Euro USD. Now going to Nifty 50, also as we had anticipated in the previous week, we anticipated a movement to the downside to that trend line before market moves up, and this is exactly what we are expecting, a continuation to the move to the upside. We can see that market at this strong demand created for us an ascending triangle. There are also strong bullish candles patterns too. So from here we can anticipate the market goes more up to this resistance at the trend line. Pretty smooth movement on Nifty 50. Now going to Bitcoin. Also, as I had spoken the previous week, it wasn't really ideal for you to trade Bitcoin until we get confirmation. And we got actually a lot of dojis before market started moving. And I also did anticipate that we have this demand or this support here as a next target, and this is what market did. From here, if we go to a higher time frame, this is actually a strong demand on Bitcoin. So we can anticipate that markets moves in a bullish movement, retrace into that resistance before a possible continuation to the downside or a possible movement to the upside. Now going to a higher vision on or higher aspect on Bitcoin, as I had spoken, it is a strong demand on a longer period of time. However, there's something to keep in mind, that strengthening dollar and working on the economy will cause some sort of bearish sentiment on crypto overall, why we might see actually Bitcoin falling further down to like 71, 72,000, right, on a stronger demand. However, on a longer period of time, once the economy stabilizes, people become more optimistic about possibility, right? Bitcoin or crypto is also, to what I see personally, a tier 3 requirement for the civilization as in growth and so on and so on. So we can start seeing over a longer period of time more belief in crypto, and that's when crypto starts flourishing a better future with decentralized finance. So that will be it for our technical outlook.
Lovely. Thank you, Sarah, for sharing your analysis. Here is Amir Amidian, Master of Finance and Investment Student in UK, and also Financial Market Analyst at Xylostar. Last week, a coordination of Gulf countries was trying to convince Donald Trump to stop the war against Iran. And also Home Depot, Walmart, and also Nvidia earnings was released. Let's have a look. Greeting everyone, welcome back to the weekly market update hosted by Xylostar. Last week, Nvidia, Home Depot, and Walmart earnings brought back the hope and optimism again to the financial markets, as the market is absolutely facing a huge conflicts at the Middle East, and it's pushing the prices of oil, gas, and gasoline higher and higher. First of all, I want to kick this session with the economic indicators, and I want to start with the Canada. In Canada, consumer price index increased to 2.8% from 2.4%. It was mainly because of the energy shocks and the gasoline increase. But worth mentioning, the rent limited the pressures on the consumers in the Canada. In the United Kingdom, inflation stepped down surprisingly to 2.8% from 3.3%, as the inflation cooled down in the services and housing sector, though the energy shocks is still pushing the prices higher. In the United States, the latest FOMC minutes was released for the latest FOMC meetings, and the officials highlighted the cautious and also uncertainty regarding the shocks of the prices for the energy sector as the conflicts in the Middle East was escalated. And also there was a sign of postponing the rate cuts to the end of 2026 or maybe even late 2027. Financial markets took it as a strength for the DXY, or better say United States dollar, and the majority of the currency pairs in the Forex market was under the pressure as dollar was gaining power. In Australia, labour market data showed early signs of softening as unemployment increased to 4.5%, with youth unemployment jumping sharply to 11.1%, pointing to weakening momentum in hiring in the country. And it may be counted as a cautious reason, or better to say, stopping the Reserve Bank of Australia to taking further steps for rate hike increase. From the geopolitical side, geopolitical tensions in the Middle East remain in focus, with KSA, UAE, and Qatar coordinating diplomatic efforts to convince Donald Trump against renewed military escalation toward Iran, as recently Iran targeted the refinery centers and also atomic centers of these countries in the Persian Gulf. Worth mentioning that the latest updates regarding Iran, Pakistan, and also USA is showing another signs of maybe a ceasefire can be continued or maybe even the deal will be finalized. Let's have a look to the upcoming week. Next week, traders will be surrounded by so many crucial economic indicators, such as CPI for Australian dollar and also the latest update regarding the New Zealand Central Bank regarding the interest rate and also decision what will happen for the rates, and also GDP for the United States and Canadian dollar. Worth mentioning, this chairman of the Bank of England, Bailey, will be also speaking regarding the latest update, geopolitical tensions, and also monetary policy for the Great British Pound. Stay tuned with Xylostar and see you next week.
That'll be it for this week. Thank you for watching. Leave a comment if you want to know more about something, and we'll see you in an upcoming one. Have a good one.